Investors like this fish. They keep taking the bait. Every time the market dips, they gobble it up. You need to be more like this fish. Be more patient. You see the dip, you know it's a trap, you know it's bait, and you're not taking it. Let's dig into today's video. I have 2 points where SPY is likely to bounce and the markets can recover, and that'd be a great time to start buying these stocks that are down 50, 60, 70%. Let's dig in. So looking at the S&P 500, we can see that we're coming down. People that jumped into investing in the stock market here are like, this isn't worth it, I'm never doing this again. But all the people like me that have been trading for a very long time over here, this was a great run up. This was a rally that has never been seen before, especially during the times that we were in. Okay, so there's two levels where this can fall down to, but what's more important is the health of the economy, which is why I'm constantly watching the markets. Okay, I'm watching inflation, I'm watching real estate prices, car prices, etc. So let's pull up metricsfi.com. We can get a quick glance at how the health of the economy is looking, because just like a company, when a company is going to report profitable earnings for the first time, and that's their outlook, then that's a time to start buying. You don't want to be investing in a company where their earning reports are getting worse and worse. So looking at metricsfi on mobile here, we could see all of the data of how the health of the economy is doing. See, gas prices are down a penny, which is good. Okay, average home prices are up. We know average home prices are up a lot, but just over a quarter, they're up almost 3%. New car sales are down. People are not buying cars. Only 13 million in units sold for last month. So it's down 13%. Inflation is up. We all know that. People's disposable income is down 33%. Personal income is down 25%. Overall, people are not spending because they have less money in their bank accounts and less income and disposable income. So all red flags. When these numbers start to turn, people start to have more money in their pockets, then they're going to spend it on stocks. Average food prices are up a lot, over 3% from month over month. Eggs through the roof, milk through the roof, meat is moving in the right direction. We'll get an update on this very soon. Fear metrics are all very high. Investors don't want to buy. Mortgage rates did drop a little bit. That's a green flag, which is why we're green here. But most of all this is not looking good, which is why we're in a tumbling status here. And then the bear market, we've been in this for 182 days. So with that being said, nothing looks good. There's no reason to invest right now, which is why I don't think we're at a bottom just yet. So I have 2 points on the S&P 500. The first level I'm looking at is where the S&P 500 was trading before the crash, okay, which is around $340, $339. Let's inch this up a little bit more. I'm almost at the peak, but it's 340, 339, 340. Now that would be a great point to bottom, because it's a very strong support there. That's where we can lift off. It might not be a full recovery unless the inflation data and market metrics start to look good. All right, that's our first point. So remember, 340. So let's put that on here. This is our first point. So we got the 340 recovery. The next one is the lowest point we're at during this bear trend. So we're in a bear trend right now, which is, it doesn't look good, but we were overvalued on pretty much everything. So it's all settling down and coming down. So the lowest point we were at was right here around 360. So 360 would be our other point. Let's bring this over. So our other point would be 360. That would be another recovery zone. So these two areas are the areas that I'm watching for a likely bounce, but I need to see that metrics inflation data start to look good. Once that starts to look good, that means the health of the economy is strengthening. You know, it's coming back to life. People have more money again. They can spend again because housing's coming down, car prices are coming down, incomes are going up, inflation's going down. All these things are going to put more money in your pockets, and in turn, you're going to start doing investments again. So that's the overview of how the market's looking. I'm not buying right now. I'm waiting. If you want to know when I'm buying, you have to jump into my Patreon and sign up for alerts, or jump in the Discord and you can chat with me. But that's it. Thanks for watching. If you like these type of videos where I go over the markets and how the health of the economy is looking, hit the thumb up, hit the subscribe. If you hit that subscribe, it's going to get you a little bit closer to retiring young.